For years, crypto lived in a strange political limbo. Too volatile to embrace. Too powerful to ignore. Presidents criticized it. Regulators circled it. Investors watched nervously as it moved trillions of dollars without asking permission from governments designed to control money. Then, almost overnight, the narrative shifted. Not with a new law. Not with a market crash. But with a few carefully chosen words from a former president who once dismissed crypto as a threat to the dollar, and suddenly sounded very different. Markets noticed immediately. Bitcoin ticked upward. Analysts paused mid-sentence. Journalists reread transcripts, unsure whether they'd missed something. Ordinary investors refreshed their screens, wondering if this was just noise, or the beginning of something bigger. Because when a figure like Donald Trump changes tone, it's rarely accidental. Strategic. And in finance, strategy often moves faster than policy. This isn't just a story about crypto. It's a story about power, who controls money, who fears losing it, and who adapts when the old rules stop working. It's about how political language can move markets before laws ever do. And it's about why a single narrative shift can ripple from Wall Street trading floors to living rooms halfway across the world. If stories like this fascinate you, subscribe and join us as we uncover the hidden mechanics of global finance. And tell us, what country are you watching from? For most of his presidency, Donald Trump treated cryptocurrency as an outsider, unstable, untrustworthy, and potentially dangerous to the dominance of the US dollar. His public statements were blunt. Bitcoin, he argued, was built on thin air. Regulators, he suggested, should keep a close eye on anything that challenged sovereign money. At the time, markets listened but didn't panic. Crypto had learned to live with hostility from Washington. What mattered more was the consistency. The message rarely wavered. Investors, analysts, and exchanges priced in the idea that political resistance was permanent. Crypto, in that worldview, would grow in spite of governments, not with them. Startups quietly adjusted their legal structures. Funds shifted offshore. Ordinary holders accepted volatility as the cost of operating outside the system. Then something subtle happened. It didn't arrive with a press conference or a policy document. It surfaced in interviews, in speeches, in comments that felt oddly restrained. Trump wasn't praising crypto, but he wasn't attacking it either. The sharp edges softened. The certainty faded. To casual observers, it sounded like nothing. To people who study political language for a living, it sounded like preparation. Because in finance, tone often changes before strategy does. And strategy always changes before markets fully understand what's coming. The shift became harder to ignore when Trump began framing crypto not as a threat, but as a reality. He spoke less about banning or crushing it and more about competition. About innovation happening whether we like it or not. For seasoned analysts, this was the tell. Politicians don't concede inevitability unless resistance has become expensive. Behind the scenes, the financial landscape had already changed. Millions of Americans now held some form of digital asset. Campaign donors had exposure. Tech entrepreneurs with political influence were no longer treating crypto as a fringe experiment. Even traditional institutions, banks Trump once championed, were quietly building blockchain infrastructure. The math no longer favored outright opposition. Journalists started connecting dots. Investors replayed clips. Crypto-native traders noticed something else. The language sounded familiar. It mirrored the early rhetorical pivot politicians made toward big tech a decade earlier. Skeptical at first, then cautiously accommodating, then fully integrated. The pattern was unsettlingly clear. For ordinary citizens, the implications felt distant but uneasy. If crypto was no longer an enemy of power, what did that mean for its promise of independence? And if Trump was changing his tone now, the question wasn't why, it was who else was about to follow. The first reaction wasn't panic, it was hesitation. Trading desks didn't erupt, but screens stayed open longer than usual. Analysts reread statements, comparing them to older quotes, highlighting what was missing rather than what was said. In global finance, silence can be louder than certainty. The absence of hostility was itself a signal, and markets are trained to react to signals before explanations arrive. Crypto prices didn't surge dramatically at first. Instead, they moved cautiously, almost politely, as if waiting for permission. Bitcoin nudged upward. Ethereum followed. Volatility compressed. That alone caught attention. When an asset known for chaos begins behaving calmly, It often means expectations are shifting beneath the surface. Investors weren't celebrating, they were repositioning. Governments abroad noticed too. European regulators monitored the reaction closely. Asian markets, already more tolerant of digital assets, treated the moment as confirmation rather than surprise. Economists exchanged messages late into the night, debating whether this was merely rhetorical drift or the opening act of a broader realignment. No one had answers yet, but everyone sensed the same thing. The rules of engagement were loosening. Then the commentary hardened. Financial news anchors stopped asking if Trump had changed his stance and began asking what it would unlock. Could regulatory pressure ease? Would enforcement soften? Would political cover allow institutions to move faster than they publicly admitted? Markets don't wait for certainty, they move on probability. Crypto companies felt it immediately. Executives who had spent years bracing for political risk began quietly revising expansion plans. Lobbyists re-entered rooms they'd abandoned. Venture capital firms reopened pitch decks labeled too sensitive. Even banks, long skeptical in public, grew bolder in private memos. When political risk declines, capital flows don't ask questions, they accelerate. For ordinary investors, the moment was disorienting. Some felt relief. Others felt suspicion. Crypto had built its identity on resistance to power, so what happens when power stops resisting? Journalists framed it as legitimacy. Traders framed it as opportunity. Critics framed it as capture. And hovering over all of it was an uncomfortable realization. The biggest risk to crypto might no longer be rejection, but acceptance on someone else's terms. By the time the dust began to settle, the shift no longer felt rhetorical. It felt structural. Analysts stopped treating crypto as a rebellious parallel system and started modeling it as an asset class negotiating its place inside existing power structures. That distinction mattered. Because once something is negotiated, it is no longer free, but it is far harder to erase. Governments adjusted their posture accordingly. Not with sweeping announcements, but with calibrated restraint. Enforcement language softened. Regulatory timelines stretched. Abroad, finance ministries quietly recalibrated assumptions about the dollar, capital controls, and digital alternatives. The message wasn't unity, it was pragmatism. Resistance had failed. Containment would be cheaper. For citizens watching from the outside, the emotional tone changed as well. Crypto no longer felt like a distant experiment run by technologists. It felt political, personal, tied to elections, influence, and ideology. The realization landed slowly but firmly. Money was no longer just about value, it was about narrative. And the narrative had shifted into a space where power was willing to bargain. In hindsight, Trump's pivot may be remembered less as a conversion and more as a recognition. Recognition that financial systems survive by adapting. Recognition that control doesn't always mean opposition. Sometimes it means alignment, on just enough terms to stay relevant. Crypto didn't win. It was acknowledged. That acknowledgement carries consequences. A system born to avoid gatekeepers now faces them openly. Innovation may accelerate, but friction will follow. Volatility may decline, but so might ideological purity. The market seems to understand this trade-off instinctively. Prices reflect optimism tempered by caution. Stability paired with unease. The deeper truth is quieter and more unsettling. Global finance is not moved only by laws or code, but by belief. When belief changes at the top, money moves everywhere else. Trump didn't change crypto overnight. He changed how power talks about it. And in a world where perception often precedes reality, that may be the most valuable currency of all. In the end, this wasn't a story about a man or even about crypto. It was about adaptation. About how systems that once seemed immovable quietly adjust when pressure becomes persistent. The global economy rarely announces its turning points. It whispers them, hides them in language, and lets markets do the talking. For viewers watching from different corners of the world, the lesson is the same. Money doesn't just respond to technology or regulation. It responds to permission. And when that permission begins to appear, even subtly, entire financial futures can tilt. The next shift may not come from a vote, a bill, or a breakthrough protocol. It may come from another sentence, spoken carefully, and heard by millions who understand exactly what it means.